You know, I spent decades cracking codes that the greatest minds in mathematics couldn't solve. I built the most successful hedge fund in history, generating returns that made Wall Street look like they were standing still. And yet, the most important code I ever cracked had nothing to do with algorithms or trading systems. It was about understanding a fundamental law of money that most people will never grasp in their entire lifetime. And once you understand this law, really understand it deep in your bones, you'll never look at money the same way again. There's a fundamental disconnect between what we're taught about earning money and how money actually works in the real world. From childhood, we're conditioned to believe in a simple equation: hard work equals financial success. Our parents, teachers, and society tell us to study hard, get good grades, find a stable job, show up on time, put in our hours, and we'll be rewarded proportionally. The harder you work, the more money you make. It's a comforting narrative because it suggests that success is entirely within our control, that all we need to do is apply more effort and the financial results will follow. But this belief system, while well-intentioned, is fundamentally flawed when it comes to building real wealth. The wealthiest people in the world didn't accumulate their fortunes by working harder than everyone else. They didn't put in more hours at the office or sacrifice more weekends than the average person. In fact, many of them work fewer hours than middle-class employees who are grinding away at their jobs. What separates the wealthy from everyone else isn't their work ethic or their willingness to sacrifice. It's their understanding of a crucial distinction. Money doesn't come from physical labor or time spent working. Money comes from thinking, from solving problems, from creating value in ways that can scale beyond the limitations of a single human body. Consider the difference between a construction worker and a real estate developer. The construction worker might wake up at 5 in the morning, work 10-hour days in harsh weather conditions, and put in genuinely backbreaking physical labor. He's working incredibly hard, sacrificing his body and his time. The developer, on the other hand, might work from a comfortable office, take long lunches, and be home by 6, yet the developer will make exponentially more money. Why? Because the construction worker is trading his physical labor for wages, while the developer is using his mind to orchestrate projects, manage resources, analyze markets, and create value through strategic thinking. One is compensated for effort expended, the other for problems solved. This isn't to diminish the value of hard work or physical labor. Every job serves a purpose, and there's dignity in all forms of work. But if we're being honest about how wealth is actually created, we have to acknowledge that compensation isn't tied to effort or hours worked. It's tied to the value of problems solved and the scale at which you solve them. A surgeon might save someone's life in a 3-hour operation and earn $10,000. A pharmaceutical executive whose company develops a drug that saves millions of lives might earn hundreds of millions. Same problem being solved, saving lives, but vastly different scales and vastly different compensation. The mental shift required here is profound and uncomfortable for many people. We want to believe that the world is fair, that hard work is always rewarded, that effort equals outcome. But the reality is that the economic system rewards value creation and problem solving, not effort. You can work incredibly hard at something that creates minimal value, and you'll earn very little. Or you can work smart, identify a significant problem, create a solution that helps thousands or millions of people, and earn exponentially more while working the same hours or even fewer. Think about the technology entrepreneurs who built companies worth billions. Were they working harder than coal miners or nurses or teachers? Of course not, but they were thinking differently. They identified problems that affected millions of people, used their minds to develop solutions, and created systems that could deliver those solutions at scale. Mark Zuckerberg didn't build Facebook by working harder than everyone else. He built it by thinking about how people connect and communicate, then creating a platform that could serve billions of users simultaneously. His compensation reflects the scale of the problem he solved, not the hours he worked. This is why education systems and traditional career advice often fail people when it comes to building wealth. They focus on teaching us to be good employees, to show up, to follow instructions, to work hard within existing systems. All valuable skills for stability and security, but not for wealth creation. Wealth creation requires a different mindset entirely. It requires learning to see problems as opportunities, to think about solutions that can scale, to understand that your mind and your ideas are infinitely more valuable than your time and your physical effort. When Jim Simons was teaching at MIT and Harvard, he was working hard and using his brilliant mind daily, but he was still operating within a system that compensated him for his time. The breakthrough came when he realized he could apply his mathematical thinking to financial markets and create algorithms that would work continuously, solving the problem of predicting market movements at a scale impossible for any human trader. He stopped trading his time for a salary and started trading his thinking for exponential returns. Same brilliant mind, completely different approach to monetization, and the results speak for themselves, with Renaissance technologies generating returns that made traditional investment approaches look primitive by comparison. The uncomfortable truth is that most people will spend their entire lives working hard without ever becoming wealthy because they never make this mental shift. They remain trapped in the time for money paradigm, believing that the solution to financial struggles is to work harder, take on more hours, get a second job, hustle more. But working harder within a flawed system just means you're running faster on the same hamster wheel. Real financial transformation requires stepping off the wheel entirely and building something different, something that rewards thinking and problem solving rather than time and effort. Most people spend their entire working lives caught in what I call the time for money trap, and they don't even realize they're in it until it's too late. This trap is so normalized, so deeply embedded in our cultural understanding of work, that question it feels almost rebellious. We've been taught that this is just how the world works. You exchange your time and labor for compensation, and that's the natural order of things. But when you really examine this arrangement, you begin to see it for what it truly is, a cage that limits your earning potential to the finite number of hours you can physically work in a day. The mechanics of the trap are deceptively simple. You wake up, go to work, put in your 8 or 10 or 12 hours, and at the end of the week or month, you receive a paycheck that reflects the time you spent. If you want to earn more money, you work more hours. Maybe you take on overtime, pick up weekend shifts, or get a second job. The formula seems straightforward. More time equals more money. But here's the devastating reality that most people discover too late. There's a hard ceiling on how much you can earn this way because there are only 24 hours in a day, and you can only work so many of them before your body and mind break down. Think about what this means for your life trajectory. If you're making $50 an hour and you work 40 hours a week, you're earning $2,000 weekly before taxes. That's your ceiling unless you work more hours or negotiate a higher rate. But even if you manage to double your hourly rate to $100, you're still trapped in the same fundamental equation. You're still trading time for money, still limited by the clock, still unable to scale beyond your own physical presence and effort. The lawyer billing $300 an hour is in the same trap as the barista making $15 an hour, just in a more expensive cage. What makes this trap so insidious is that it often comes with just enough comfort to keep you from questioning it. You get regular paychecks, maybe some benefits, perhaps even the illusion of security through a salary and a job title. Society validates this arrangement. Your family is proud that you have a stable job. Your friends understand your career in conventional terms. Everything about our social structure is designed to make the time for money exchange feel not just normal, but virtuous. We celebrate people who work long hours, who sacrifice their time for their jobs, who pride themselves on their work ethic and dedication. But while you're busy trading your hours for dollars, something devastating is happening. You're aging. Your energy is depleting. Your health may be declining. The hours you're selling today are hours you can never get back. Moments with your children you'll never reclaim, experiences you'll never have, dreams you'll never pursue, because you're too busy working to pay the bills. And the cruelest part of the trap is that the money you earn from selling your time is usually just enough to cover your basic expenses, leaving little to nothing for building real wealth or creating alternative income streams that could free you from the trap. Consider the psychological impact of this arrangement. When your income is directly tied to your presence and your hours, you can never truly relax. Taking a vacation means lost income. Getting sick means lost income. Every hour you're not working is an hour you're not earning. This creates a constant underlying anxiety, a sense that you can never stop, never rest, never step away, because the moment you do, the money stops flowing. You become a prisoner to your own earning capacity, afraid to take risks or make changes because you can't afford any interruption to your income stream. The trap becomes even more apparent when you look at what happens during economic downturns or personal crises. If you lose your job, your income immediately drops to zero. If you get injured and can't work, the money stops. If your industry changes or your skills become obsolete, you have to start over, trading your time in a different way, but still trapped in the same fundamental exchange. There's no momentum, no compound effect, no residual income from all those years of work. Every month you start from zero, needing to put in the hours all over again to generate income. What's particularly tragic is watching people who've been in this trap for decades suddenly realize the math doesn't work. They're in their 50s or 60s. Their bodies are worn down from years of labor, and they're looking at retirement with the dawning horror that they haven't built anything that will continue generating income when they can no longer work. They've spent 40 years trading time for money, and now that their time and energy are running out, they're facing the reality that they'll have to continue working far longer than they ever imagined or drastically reduce their standard of living. The time for money trap also creates a scarcity mindset that's hard to escape. When you're constantly worried about having enough hours to work, enough income to cover expenses, you become risk averse. You can't afford to take time off to learn new skills or explore new opportunities. You can't invest time in building something that might not pay off immediately. You're stuck in survival mode, perpetually reacting to immediate financial needs rather than strategically building toward financial freedom. Every decision becomes about short-term income rather than long-term wealth building, and this keeps you running on the hamster wheel year after year, decade after decade, until you finally realize you've been running in place the entire time. The law of leverage is perhaps the most important principle of wealth creation that exists, yet it's something that's rarely taught in schools, seldom discussed in families, and generally misunderstood by the vast majority of people working traditional jobs. At its core, this law states that money is a result of solving problems at scale without requiring your physical presence for every transaction or interaction. It's the difference between helping one person at a time and helping thousands or millions of people simultaneously. It's the distinction between being compensated for your hours and being compensated for the value you create, regardless of how much time it takes. When you truly grasp this principle, you begin to see the world through an entirely different lens. Every successful business, every wealthy individual, every fortune that's been built has leveraged this law in some form. The bakery owner who wakes up at 4 a.m. to make bread by hand is working hard, but they're limited by their own capacity to bake. They can only make so many loaves, serve so many customers, generate so much revenue in a single day. But the entrepreneur who develops a recipe, systematizes the production process, hires bakers, opens multiple locations, and eventually franchises the concept as applied leverage. The same bread-making knowledge that was limited to one person's daily output now serves thousands of customers across dozens of locations, generating income far beyond what any single person could produce. This is the fundamental shift that separates the middle class from the wealthy. The middle class trades effort for income. The wealthy solve problems once and get paid repeatedly. A music teacher gives one piano lessons and can only teach as many students as there are hours in their week. Perhaps they manage to fill their schedule completely, teaching 8 students a day, 5 days a week. They're working hard, they're skilled, they're making a living. But compare that to a musician who records an online piano course. They create the content once, spending perhaps a few weeks filming and editing, and then that course can be sold to 10,000 students without the musician needing to be present for a single lesson. Same knowledge being shared, same problem being solved, but one approaches leverage and the other doesn't. The beauty of solving problems at scale is that your compensation becomes disconnected from your time investment. This is counterintuitive to everything we've been taught about work. We're conditioned to believe that more work should equal more pay, that compensation should be proportional to effort. But in reality, compensation in a market economy is proportional to the value created and the number of people that value reaches. A software developer might spend 3 months building an app that helps people manage their finances. During those 3 months, they're working intensely, probably not earning anything. But once that app is complete and available, it can serve 1 million users without any additional effort from the developer. They've solved the financial management problem once, and they're getting paid for it 1 million times over. This is why the question you should constantly be asking yourself isn't, how can I work harder? But rather, what problem can I solve that affects many people, and how can I deliver that solution without needing to be physically present? It's a complete reframing of how you approach earning money. Instead of looking for jobs that pay well per hour, you start looking for problems that, once solved, can benefit large numbers of people. Instead of optimizing for a higher salary, you start optimizing for scalability and impact. Consider the difference between a personal trainer and a fitness app developer. The personal trainer might charge $100 per session and work with 6 clients a day, earning $600 for a full day's work. That's good money, and there's real value being provided. But they're completely dependent on their physical presence. If they get sick, the income stops. If they want to take a vacation, they lose those earning days. They're perpetually trapped in the exchange of time for money. Now, consider someone who develops a fitness app with workout plans, nutrition tracking, and progress monitoring. They might spend 6 months building the app with no income, which requires both vision and financial runway. But once it's launched, that app can serve 10,000 users simultaneously. Even if they charge just $10 per month per user, that's $100,000 in monthly recurring revenue. The personal trainer is solving the fitness problem one person at a time. The app developer solved it once and deployed the solution at scale. What makes this law even more powerful is that it compounds over time. When you're trading time for money, every month you start from zero. You need to put in the hours all over again to generate that month's income. But when you've built something with leverage, there's a momentum effect. The online course you created last year continues selling this year. The book you wrote 5 years ago still generates royalty checks. The rental properties you purchased continue producing monthly cash flow. The software you built keeps serving customers. Your past efforts continue paying you, which means your wealth can grow exponentially rather than linearly. The real transformation happens when you internalize that your goal shouldn't be to become highly paid for your time, but rather to become irrelevant to the delivery of value. That might sound strange, but think about it. The most successful business owners are those whose businesses run smoothly without them. The wealthiest investors are those whose money works for them while they sleep. The most impactful creators are those whose content reaches millions without requiring their constant involvement. You want to build systems, create products, develop processes, and establish platforms that solve problems and deliver value automatically without needing you to show up every single day to make it happen. Understanding that leverage is the key to wealth is one thing, but knowing how to actually access and deploy leverage is another matter entirely. Throughout history, there have been different forms of leverage available to humanity, and what's remarkable about the era we're living in now is that all forms of leverage are more accessible than ever before. The 4 primary types of leverage that have created virtually every fortune in existence are labor, capital, code, and media, and each operates on the same fundamental principle of multiplying your efforts beyond what you could accomplish alone. Labor leverage is the oldest and most traditional form, dating back thousands of years to when the first person realized they could accomplish more by coordinating the efforts of multiple people rather than working alone. This is the leverage of management and leadership. When you hire employees, contractors, or build teams, you're essentially cloning your time and efforts through other people. Instead of being limited to what you personally can produce in a day, you can now direct the productive capacity of 10, 50, or even thousands of individuals. The construction company owner isn't laying bricks themselves, but they're coordinating dozens of workers who collectively can build entire neighborhoods. The restaurant owner isn't cooking every meal, but they've assembled a kitchen staff that can serve hundreds of customers daily. Labor leverage transforms you from a doer into an orchestrator, and your income potential shifts from what your two hands can produce to what your mind can organize and direct. The challenge with labor leverage is that it comes with significant overhead and complexity. Managing people requires skill, patience, and constant attention. You're dealing with human beings who have their own motivations, problems, and limitations. There are legal considerations, payroll obligations, training requirements, and interpersonal dynamics to navigate. This is why many people find labor leverage intimidating or overwhelming, but for those who master it, the rewards can be substantial. Every major corporation, every large-scale operation, every significant manufacturing or service business relies fundamentally on labor leverage. Capital leverage is the art of using money to make money, and it's the form of leverage that the financial world has perfected over centuries. When you use capital leverage, you're deploying resources beyond your own savings to create wealth. The most common example is real estate investing, where you might put down 20% on a property while the bank finances the other 80%. Now you control an asset worth 5 times your initial investment, and you benefit from the appreciation and cash flow on the entire property value, not just your down payment. This is why real estate has created more millionaires than perhaps any other investment vehicle. You're using the bank's money as leverage to amplify your returns. Capital leverage extends far beyond real estate, though. It's the venture capitalist who raises a fund to invest in dozens of startups, multiplying their ability to participate in the upside of innovation. It's the business owner who secures a line of credit to purchase inventory, enabling them to fulfill larger orders than their own cash reserves would allow. It's the investor who strategically uses margin in their brokerage account to increase their market exposure. The fundamental principle is always the same. You're accessing and deploying resources beyond your own immediate wealth to create opportunities for greater returns. The risk, of course, is that leverage works in both directions. Just as it can amplify gains, it can also magnify losses, which is why understanding risk management becomes critical when employing capital leverage. Code leverage represents the most transformative form of leverage in modern history, and it's what I utilize to build Renaissance technologies into the most successful hedge fund ever created. Code leverage means building software algorithms, systems, or digital products that can work infinitely without requiring additional human effort. Unlike labor leverage, where you need more people to scale, or capital leverage, where you need more money to expand, code leverage has essentially zero marginal cost. Whether one person uses your software or 1 million people use it, the effort required from you remains exactly the same. This is why technology companies can achieve such astronomical valuations and why programmers and developers have become some of the highest paid professionals in the world. The beauty of code leverage is that it operates 24 hours a day, 7 days a week, without complaining, without needing breaks, without requiring management. The trading algorithms I developed could analyze thousands of data points per second, execute trades across global markets, and operate continuously while I slept. A mobile app can serve users in Tokyo, London, and New York simultaneously. An online course platform can deliver education to students around the world at any hour. E-commerce websites process orders automatically, digital products are delivered instantly, and software services scale to millions of users without human intervention. This is leverage in its purest and most powerful form. Media leverage is the newest major form of leverage and has been democratized more than any other through the internet and social platforms. Media leverage means building an audience, creating attention, establishing a following that amplifies your message and multiplies your reach. When you have 1 million followers on social media, you can share an idea, promote a product, or offer a service, and it reaches all those people simultaneously without you needing to have individual conversations with each person. Influencers, content creators, authors, podcasters, and YouTubers are all utilizing media leverage. They create content once, a video, an article, a podcast episode, and it can be consumed by thousands or millions of people. What makes media leverage particularly powerful in the modern era is that it compounds with the other forms of leverage. If you have an audience, you can more easily raise capital because investors see proof of market interest. You can more effectively recruit talent because people want to work with recognized brands. You can deploy code leverage more successfully because you have distribution channels already established. The 4 types of leverage aren't mutually exclusive. In fact, the most successful wealth builders combine multiple forms of leverage to create exponential effects that would be impossible with any single approach. One of the most profound realizations you can have about wealth creation is understanding the difference between linear effort and exponential results. And once you truly grasp this distinction, you'll never look at your work or your income the same way again. Most people operate their entire lives in the linear paradigm without even realizing there's an alternative, and this single blind spot keeps them from ever achieving the financial freedom they dream about. The mathematics of wealth are fundamentally different from the mathematics of labor, and this difference is what separates those who struggle financially their entire lives from those who build substantial wealth. Linear effort produces linear results, which means there's a direct one-to-one relationship between your input and your output. If you work 1 hour, you get paid for 1 hour. If you want to earn twice as much money, you need to work twice as many hours. If you want to triple your income, you need to triple your time investment. This seems logical and fair on the surface, and it's how most employment relationships are structured. You trade your time for money at a fixed rate, and scaling your income requires scaling your time proportionally. A barista who makes $20 an hour can calculate exactly how much they'll earn based on their shift schedule. An accountant who bills clients at $200 per hour knows that a 40-hour week will generate $8,000. The relationship is predictable, stable, and completely linear. The problem with this linear model is that it hits hard limits very quickly. There are only 24 hours in a day, and you can realistically only work a fraction of those hours before exhaustion, health problems, or burnout sets in. Even if you push yourself to the absolute maximum, working 60 or 70 hours a week, you've only increased your output by a fixed multiple. You're still trapped in the same fundamental equation. This is why doctors, lawyers, and other highly paid professionals who bill by the hour often feel frustrated despite earning 6-figure incomes. Yes, they're well compensated for their time, but they're still selling hours, and there's an absolute ceiling on how many hours they can sell. They're running faster on the treadmill, but they're still on the treadmill. Leveraged effort, on the other hand, produces exponential results, which means your output can grow geometrically without a proportional increase in your input. This is where the mathematics become truly fascinating and where real wealth creation happens. When you build systems, create products, or establish platforms that have leverage, your income potential becomes disconnected from your time investment. You might work the same 40 hours per week, but your earnings could be 10 times, 100 times, or even 1,000 times what they were before. The effort doesn't scale linearly with the results because you've introduced multipliers into the equation. Consider a simple example that illustrates this principle clearly. Imagine 2 people who are both excellent writers with valuable knowledge to share. Person A decides to offer one coaching sessions at $100 per hour. They work 40 hours a week, earning $4,000 weekly. To earn $8,000, they'd need to work 80 hours, which is unsustainable. They're in a linear model. Person B takes their knowledge and writes a book, then creates an online course, then starts a YouTube channel sharing free content that drives people to their paid products. In the first few months, Person B might actually earn less than Person A because they're investing time in creating these assets without immediate compensation. But 6 months later, Person B's book is selling 50 copies a day at $20 each. Their course has 500 students paying $200. Their YouTube channel generates ad revenue and attracts sponsors. Suddenly, Person B is earning $20,000 per month while working the same 40 hours per week. And more importantly, much of that income is now passive or semi-passive. They've moved from linear to exponential. The exponential model also creates compounding effects that make the gap between linear and leveraged approaches grow wider over time. When you're in a linear model, every month you start from zero. You need to work the hours all over again to generate income. But in a leveraged model, this month's efforts build on last month's foundation. The YouTube subscriber who discovered you last year is still watching your new videos. The customer who bought your product 6 months ago might buy your next product. The software you built continues serving users and generating revenue. Each new effort you make doesn't just create isolated results, it adds to an accumulating system that grows stronger over time. This is why wealth inequality continues to accelerate in modern economies. Those who understand leverage and exponential growth are able to compound their wealth at rates that seem almost unfair to those stuck in linear models. A business owner who builds systems isn't just earning more than their employees, they're playing an entirely different game with different mathematics. While the employee's income might grow 5% annually through raises and promotions, maintaining a linear trajectory, the business owner's wealth might double every few years as their systems mature and scale. After 10 years, the gap between these two approaches isn't just substantial, it's astronomical. The shift from linear to exponential thinking requires a fundamental change in how you value your time and efforts. Instead of asking, "How much can I earn per hour?" you need to ask, "What can I build that will generate value independent of my hours?" Instead of optimizing for immediate income, you optimize for long-term leverage and compound growth. This often means accepting lower income in the short term while you build systems, which is why many people never make this transition. They can't afford to take the temporary hit to their income, or they lack the patience to invest months or years building something before seeing returns. What's particularly important to understand is that exponential growth starts slowly, often appearing less attractive than linear growth in the early stages. This is why so many people abandon leveraged approaches and return to trading time for money. They invest 3 months building something, see minimal returns, and conclude it's not working. But exponential growth curves are deceptive in their early stages. They look flat for a long time, and then suddenly they shoot upward dramatically. The difference between year 1 and year 2 might seem modest, but the difference between year 5 and year 10 can be life-changing, and that's the power of escaping linear models and embracing leverage. There's a critical distinction that separates entrepreneurs from employees, wealth builders from wage earners, and those who achieve financial freedom from those who remain perpetually dependent on their next paycheck. This distinction isn't about intelligence, work ethic, or even initial capital. It's about whether you're working in the system or working on the system, and understanding this difference is absolutely fundamental to building wealth. Most people spend their entire careers working in systems that other people built, executing tasks, following processes, and delivering services. They're essential to making the system run, but they're trapped within it. The wealthy, on the other hand, spend their time building and refining systems that operate independently of their constant involvement. When you work in a system, you're essentially a component of a machine. You show up, perform your designated function, and the system produces its output. A cashier in a retail store is working in the system, scanning items and processing transactions. A nurse in a hospital is working in the system, following protocols, and caring for patients. A programmer at a tech company is working in the system, writing code according to specifications. These are all valuable roles that require skill and dedication, but the fundamental characteristic is that the individual is necessary for the system to function. If they don't show up, their part of the system stops working. Their income is directly tied to their presence and participation. Working on the system is fundamentally different. It means stepping back from the day to day operations and instead focusing on designing, building, and optimizing the system itself. The retail store owner isn't scanning items at the register. They're analyzing sales data, optimizing inventory systems, training staff, and thinking about expansion strategies. The hospital administrator isn't treating patients directly. They're designing care protocols, managing resources, and ensuring the entire organization runs efficiently. The founder of a tech company isn't writing most of the code. They're setting the vision, building the team, establishing processes, and creating a structure that allows hundreds of programmers to work effectively together. The power of working on the system rather than in it is that you're building something that can operate without you. This is the ultimate form of leverage because you're creating a machine that continues producing value even when you're sleeping, on vacation, or focused on other projects entirely. When I was developing the algorithms and systems for Renaissance Technologies, I wasn't sitting at a trading desk manually executing trades all day. I was working on the mathematical models, the data processing infrastructure, the risk management frameworks. I was building a system that could trade automatically, that could analyze millions of data points and make decisions without my direct involvement in every transaction. This shift from working in to working on requires a complete change in how you think about your role and your value. When you're working in a system, your value is measured by your output and your consistency. Are you meeting your quotas? Are you completing your tasks? Are you following the procedures correctly? But when you're working on a system, your value is measured by the effectiveness and scalability of what you build. Does the system work when you're not there? Can it handle increased volume without proportional increases in costs? Is it improving over time? Does it create value automatically? The trap that catches many aspiring entrepreneurs and business owners is that they build businesses where they're still working in the system rather than on it. They start a business but then become the chief operator, the person who has to be involved in every decision, every sale, every delivery. They've essentially created a job for themselves rather than a business. A freelance graphic designer who starts a design agency but still does all the design work themselves hasn't really built a business. They've just complicated their freelance career. They're still trading time for money, just with more overhead and stress. The transition from working in to working on requires delegation, systemization, and a willingness to let go of control over day-to-day operations. This is psychologically difficult for many people because it requires trusting others to execute tasks that you could probably do better yourself. It means accepting that the system won't always operate with the same level of quality or precision that you would personally deliver. But this is a necessary trade-off because perfection that requires your constant presence is a prison, while a good enough system that runs independently is freedom. Consider the restaurant industry as a clear example of this principle. A chef who opens a restaurant and works in the kitchen every night, cooking every dish themselves, is working in the system. They might create amazing food, build a loyal following, and even become locally famous. But their income and the restaurant's success are completely dependent on their presence. If they get sick or want to take a vacation, the restaurant either closes or the quality suffers. They're trapped. Now consider a restaurateur who opens their first location, develops standardized recipes and procedures, trains a kitchen staff, and then uses that template to open second and third locations. They're working on the system, creating replicable processes that don't require their personal involvement in every meal served. The same principle applies across every industry and every type of business. The consultant who builds a methodology and trains junior consultants to deliver it is working on the system. The software developer who writes code that automates tasks is working on the system. The content creator who builds a team to handle editing, research, and production is working on the system. In each case, the individual is investing their time and energy into building something that multiplies their impact beyond what they could personally accomplish. What's particularly important to understand is that working on the system doesn't mean you never work in it. Even the most successful business owners occasionally jump into operations when needed. But the key difference is that it's a choice, not a necessity. They can step in when they want to, but the system doesn't collapse when they step away. The business continues generating value, serving customers, and producing income whether they're actively involved or not. This is why the wealthy can take month-long vacations, why successful entrepreneurs can run multiple businesses simultaneously, why investors can manage large portfolios without working 18-hour days. They've built systems that work for them rather than working in systems built by others. They've made themselves valuable by creating value, generating machines, not by being an irreplaceable cog in someone else's machine. The path to financial freedom isn't about finding a higher paying job or working more hours. It's about transitioning from working in systems to working on systems that create wealth automatically. There's a simple test that cuts through all the complexity, all the theories, and all the business jargon about wealth building, and it reveals with brutal honesty exactly where you stand financially. This test isn't about how much money you make, how impressive your job title sounds, or how busy you appear to be. It's about whether you've actually built leverage or whether you're still trapped in the fundamental exchange of time for money. The test is this: if you stopped working today, would money still come in next month? Not savings you've accumulated, not severance pay, not unemployment benefits, but actual new money flowing into your accounts from systems, assets, or businesses you've built. If the answer is no, then regardless of how much you currently earn, you don't have leverage yet. This test is uncomfortable for most people because it forces them to confront a reality they'd rather avoid. You might have a prestigious job at a respected company, earning a six-figure salary that lets you live comfortably and even save some money each month. You might feel successful by conventional standards, driving a nice car and living in a good neighborhood. But if your income would immediately drop to zero the moment you stopped showing up to work, you're still fundamentally vulnerable. You're one layoff away, one health crisis away, one company restructuring away from financial disaster. Your comfortable lifestyle isn't built on a foundation of leverage. It's built on the continuation of your ability to trade time for money. The wealthy think about this test differently because they've structured their lives around building income streams that persist without their direct involvement. They own rental properties that generate monthly cash flow whether they're working or vacationing in Europe. They have dividend-paying stock portfolios that distribute earnings automatically. They've built businesses with teams and systems that continue operating profitably without requiring the owner's daily presence. They've created intellectual property, books, courses, software, patents that generate royalties and licensing fees while they sleep. They've invested in other people's businesses as silent partners or angel investors, receiving returns on their capital without needing to work in those businesses. What makes this test so revealing is that it exposes the difference between income and wealth. Many high-earning professionals have impressive incomes, but no real wealth because every dollar they earn requires their continued participation. A surgeon might earn $500,000 annually, but if they can't operate, the income stops. A successful lawyer might bill $1 million a year, but if they stop practicing law, the revenue disappears. These individuals have high incomes, but they don't have leverage. They're sophisticated wage earners, nothing more. They're trapped in expensive versions of the time for money exchange. The moment you apply this test honestly to your own situation, you'll likely realize that most of what you consider your financial success is actually just an elaborate dependence on your continued ability to work. Your mortgage payment depends on next month's salary. Your car payment requires continued employment. Your lifestyle requires your ongoing participation in the labor market. You might have some savings, maybe even a substantial emergency fund, but that's just stored labor from the past, not a system that generates new wealth. It's a buffer, not a solution. This realization can be depressing or it can be liberating, depending on how you respond to it. The depressing response is to feel hopeless, to believe that building true leverage is only possible for people with special advantages or opportunities you don't have. The liberating response is to recognize that now you know what you need to build, and you can start making different choices that move you toward real financial security. Every decision about how you spend your time and money can now be evaluated through this lens. Does this move me closer to having income that continues without my direct labor, or does it just perpetuate my dependence on trading time for money? The path from having no leverage to passing this test doesn't happen overnight, and it rarely happens through a single big move. It's usually a gradual process of building multiple small streams of passive or semi-passive income that eventually add up to something significant. Maybe you start by creating a small online course that generates a few $100s a month. That's not enough to live on, but it's income that arrives whether you work that particular month or not. Then maybe you invest in a rental property that covers its own mortgage and generates a small positive cash flow. Again, not life-changing money, but another stream that persists without your active labor. Then perhaps you build a blog or YouTube channel that eventually generates ad revenue or affiliate income. Each of these streams individually might be modest, but collectively they represent the foundation of real financial security.